Hi everyone, welcome back to my channel. Today's topic is about retirement, specifically on CPF. Okay, I believe CPF shielding has been talked about quite often, but what CPF shielding has not been talked about often is SA and OA shielding. What's the difference? Okay, so everyone's talking about SA shielding only, but I believe not many people have talked about OA shielding, so I'll share more about what is both kinds of shielding and then explain how you can do it and then what's the pros and cons. Okay, so let's go! Okay, so CPF shielding 101, both OA and SA explain what is it, how to do it, what's the pros and cons. Okay, so this is only relevant to Singaporeans and PRs who have not reached 55 years old. So you already reached 55 years old, you can't do this shielding anymore, so no point in watching this video. But if you guys are still willing to watch, please continue. Okay, so this video is purely for educational sharing purposes. Please do your own due diligence or do a personalized consultation, as this may not be suitable for everyone. Okay, so some prelude. Who is it for? It's for people who like guaranteed interest rates from CPF. Okay, and it's only suitable for high-income individuals who likes their tax reliefs, and also people who are financially savvy and comfortable with some amount of risk. Okay, so CPF shielding definitely has risk lah, so I'll explain the risk later. Okay, so who is it not for? It's not for people who expect super high returns, like you think crypto, high risk, high return. No, this is not for you. Okay, then if you have low CPF savings or you're going to withdraw all your CPF soon, this is not for you also, because shielding is make sure you still continue to put the money inside CPF. Okay, then it's also not for the technological or non-financially savvy or the people who do not have the right guidance lah. Yeah. Okay, so anyway, this talks about like if I shield both SA and OA such that RA has less than the basic retirement sum amount, will I not be entitled to CPF Life? So this is one of the writers that wrote about OA shielding back in 2020. So this is the answer lah. So basically, you will still get to join CPF Life, because by the time you have, if you have the minimum amount, then by the time you grow until 60k, by the time you reach 65 years old, right, you can already get into CPF Life lah. So you will not be disqualified from CPF Life. Okay, yeah. Okay, so what exactly is shielding, and then why bother with shielding? Okay, this is because of CPF interest rates. So CPF have different interest rates in their different accounts. So for ordinary account is 2.5%, special account and Medisave account is 4%, same as retirement account. Okay, so when do you actually get this retirement account? You only get it when you turn 55 years old. So when you turn 55 years old, we will first transfer your SA, then your OA, not we, I mean CPF, not me. Okay, transfer your SA and your OA up to your full retirement sum to create your retirement account. Okay, so your SA savings will be transferred first. Okay, so why you need to bother with this is because after you reach 55, you cannot do any transfers between your OA and SA anymore. Okay, so this question answers it lah. So I'm 55, can I transfer my OA to my SA to earn higher interest rate? So the answer is no. You can only transfer before you reach 55 years old from your OA to your SA. Okay, so they're answering the question lah. If you wish to earn a higher interest rate, you can only transfer your OA to your RA. So once you transfer it into your RA, right, it will be used for your CPF life premium, so you cannot take it out anymore. Okay, so the aim of shielding, right, is to make sure that you can earn the 4% in the SA, continue to earn the 4% in the SA by shielding your SA. Okay, so because they will take from your SA first ma. So if you take away all the money from your SA, the maximum they can take from your SA is not much lah. Then after that, they will take from your ordinary account. So all this will go into your retirement account. Then your SA has more money to continue earning interest at 4%, and you also have the flexibility to withdraw it anytime. Okay, yeah, so this explains how you can withdraw your CPF depending on your birth year. So let's say you are 1958 and after, so total withdrawable is 5,000 from your CPF savings, and then if you meet your full retirement sum, you can withdraw all of your OA and SA. Okay, So this is how the withdrawal works. Okay, so after 55, once you reach the full retirement sum, you can withdraw all the remaining money in your OA and SA if you want to. Okay, but most people still leave it in their OA and SA lah, because they want to continue earning risk-free interest rates. Okay, so just an example of how RA is created. If you don't do any shielding, you just leave the money there to do whatever it's supposed to do. Okay, so imagine this person A has the following CPF balances and is about to reach 55 years old. It's 1 month before his birthday. Okay, so ordinary account is currently 300k, special account is 300k. For the purposes of this shielding explanation, we will not care about Medisave account, because Medisave account is not taken into account when forming the retirement account. So basically, anyway, if you didn't know, just a fun fact, your Medisave account can have a maximum of the basic healthcare sum only. So anytime you exceed the basic healthcare sum, they will all go into your SA already. You won't go into the MA anymore. Okay, so basic healthcare sum is every year will change one. So every year you can put a bit more into your Medisave account. Okay, so for those people who are around 40s, most of your basic healthcare sum will already have met. So your monthly contributions from your employer and employer, right, usually all will go into OA and SA only. Okay, so normal people who reach 55, I think the OA and SA should have around 300k each lah. Like people who are middle income, higher middle income earners, because we are talking about shielding, right? So we are talking higher middle income earners. Okay, so to form the retirement account, CPF will take 192k directly from the SA without any shielding, and then the RA will be formed lah. Okay, so the RA is formed, and then the SA amount goes down, and then you are earning the same interest rate as before you actually form the RA. Okay, so same interest rate lah. You get then 2% 300k, then 4% 300k is still same interest rate. You are still earning the same stuff lah. Okay, so what is SA shielding? So you invest your SA money in a low risk product, and then before you hit 55 years old, such that only 40k is left. So you can maximum you can invest is the amount above 40k lah. So you must minimum keep 40k in your SA before you can invest, and you must pass this CPF IS questionnaire before you can do the investment. Okay, so we are not really doing investment. We are just going to put this money temporarily in the investment vehicle, and then after my RA is formed, I'm going to take it out from this investment vehicle. Okay, so next, after you turn 55, when the RA is formed, you will sell all your shielding investments back to your CPF. So we term this as de-shielding. So you do it ASAP, so you don't miss out on too many months worth of interest. Okay, so some of the products that you can use to do your shielding for SA, unit trust is possible, investment linked products also possible, annuities, although this one I don't recommend annuities. Endowment products, yes, also same, and not less liquid lah. So all these not recommended SG, government bonds, less liquid. Okay, so treasury bills possible if you do the 6 months one. Yeah, so it's only possible on the high interest rate environment, because now technically treasury bills are higher interest rate than your still not higher interest rate than your SA, but you can do it lah, treasury bills. Okay, so you lose out on a few months of interest lah. Like I mentioned, everything that is good, right, comes with some form of risk one. So definitely there's risk lah. No one saying that it's for sure you will 赚钱, right? Okay, so very important portion, get the right person to help you if you don't have the knowledge, so you don't miss out on too much interest. Okay, so example with SA shielding. So just now using the same balances, right? After that, we're going to shield this amount of 260k, then left the 40k in the SA, right? Then before you, when you form your RA, the CPF will take the money from OA, 152k, and the remaining 40k left in the SA. Okay, so this is to make up the full retirement sum. So the full retirement sum in 2022 is 192k lah. So 192k. Okay, so it's the same as just now before here, 192k. Yeah, this is the full retirement sum. Okay, so with SA shielding, what do you gain? You earn an extra 1.5% on the extra 152k. So previously just now is no change, right? Now you move 152k into a 4% account, so you earn extra. Yeah, you earn extra 1.5% on 152k. Okay, so you also go and multiply how much is that lah. Okay, then after the RA is formed, you can do top ups to earn 4% in the RA as well. But then you won't qualify for this thing called the retirement sum topping up scheme relief because you already reached your full retirement sum. Okay, so how to qualify for this RSTU tax relief, right? Is any amount that you top up that is still below the current full retirement sum and your current retirement account savings. This one you can qualify for RSTU. So because this person already reached his full retirement sum, so whatever he top up will not qualify for tax relief already. Okay, so let's say this person only have 90 plus k in his RA, he can top up 8k per year to get tax relief. Okay, so now comes the second option, which is you can do OA shielding together with SA shielding. Okay, so it's how you do the shielding is similar. You invest your OA account such that you are left with an optimal amount. Okay, so basically most people will advise us do all the way lah. So you can invest above 20k, you will invest all the amount lah. Okay, so what's the aim of this OA shielding is to combine with SA shielding. You prevent more money from going to RA, which is less flexible than OA and SA lah. So some people don't like CPF life, they don't want it to go into RA, then this is what they do. And some of the touted benefits is to get more tax relief on this RSTU. Okay, so basically when you do this shielding, right, only 60k will go inside your RA, so you can do RSTU. Okay, so alternatively, if you have a home loan to service, there's no need to do OA shielding. You can log into CPF to reserve your OA. Yeah, which is quite unlikely lah, that you still have housing payments unless you are doing the housing as an investment and you are quite old already by then. Not many people want to lend you money to invest in a house. Yeah, okay, so quite unlikely, but okay, sure. OA products that you can invest in addition to just now what I introduced for the SA products, you can also do all this ETFs. Because of OA, you can invest in more products. So whatever you can invest for SA, OA also can invest, plus all these products. So all these products, ETFs, depends, but fees involved might be high. Fund management accounts, usually is quite high risk, so don't recommend. Government terms all these as high risk lah, so also restricted amount, so I don't recommend to use all these products as your OA shielding vehicle lah. Yeah. Okay, so let me continue with the same example. If you do OA and SA shielding, so you invest 280k, you invest 260k for your SA. Okay, then CPF take 40k from your SA, 15k from your OA, leaving you 5k for you to withdraw in cash. Because remember, if you do not have the required basic retirement sum, right, they will still let you withdraw 5k. So yeah, they will only take 15k from your OA, leave you 5k inside. So basically your RA is only 55k lah. Okay, so after you de-shield, right, your OA will be 285k and then your SA will be 260k. Okay, so assuming you every year you go and do the 8k top up, so you can top up for 10 years until you reach 65 years old. So the extra amount that you will earn in the tax relief, assuming you are super high income earner, you earn the top tier of the personal income tax rate, right? So it will be 22% for the YA 2023, which is the financial year 2022, and it will be 24% from YA 2024 onwards, which is financial year 2023. Okay, so 24% from then onwards, 24% times the remaining 8k that you will top up every single year until you reach 65. Yeah, so I did the calculations already. If you start with the initial 55k, you top up 8k every single year for 10 years. Then together with the interest of 4% every year, by the time you reach 2032, you will have hit the FRS lah. So maybe the last year you won't get the full 8k top up as tax relief. So maybe you get lesser than the amount that I calculated. Yeah, so around extra 19k lah in tax reliefs over 10 years. Okay, So, I mean, as a comparison, when should I do SA shielding only and when should I do both OA and SA shielding? Okay, so using the same example, right, you can see that if you compare the balances lah, obviously this guy that can earn 1.5% extra on the 137k. So you punch this amount into the financial calculator, the extra 1.5% will yield you additional about 22k worth of interest leh. So actually nothing good about OA shielding lah. I would prefer, if I'm doing the shielding, right, I need to do SA shielding. I won't bother with OA shielding. Okay, so OA shielding is more for those people who, I don't know, really hate CPF life lah, I guess. Yeah. So the assumptions in making this comparison is that both will not be withdrawing any monies at 55 years old. Both will continue to contribute 8k a year for 10 years into the RA after 55 years old until the enhanced retirement sum is met. Okay, so the conclusion is that depending on your actual CPF account balances and cash, that you actually have to do the CPF RA top up. So for top up, obviously you need cash, right? So you need to be quite well off lah. You do the simple math. Will this extra interest rate weigh out the tax relief you have gotten? Because the tax relief you can get, right, is maximum this amount leh. So you won't sell weigh the thing lor. So personally for me lah, I would prefer to just do SA shielding. So why SA shielding is better? Because you can even at 55 years old, you can straight away top up the amount to ERS and start to earn the 4% already. So much better, right? You earn more than this amount. You can top up more and earn risk-free 4%. Okay? Although you won't get the tax relief lah, but tax relief not so important, right? Yeah. So if you compare the money to money, right? Definitely SA shielding is sufficient. Don't need to do OA shielding together. Okay, so some pros and cons on CPF shielding. Pros, definitely higher interest rates, and sometimes you can get tax savings. Okay, so cons is knowledge related lah. So knowledge related, some people don't know about the risks, and then there's definitely some risks that I mentioned. Okay, so volatility, so you invest in, it's an investment so you invest in some funds. Definitely the fund's going to move a bit up and down, right? Okay, so you need to choose the right fund. Okay, fees also, some fees might not be that low. Okay, so you need to calculate whether your interest actually outweigh the fees, that kind of thing. And then liquidity must be able to liquidate it quickly. Okay. Yeah, so some people might think, is this illegal? Can I do CPF SA shielding? Okay, so CPF SA shielding, right, has been done for many years. CPF is actually aware that you guys do CPF shielding. Okay, so it comes with cost and investment risks. They are not stopping you from doing it. They are just saying that sometimes got a lot of FA promote this shielding. I don't know why, because technically we don't earn any money if you buy a CPF related ILP. Because CPF, they don't charge any sales charge. So yeah, so not sure why would FA tout it. Maybe they really trying to help their clients. Okay. So they say if they invest, the FA go and promote this without highlighting the cost and investment, may be guilty of mis-selling. So I'm telling you, if you're really not investment savvy, you don't know all this shit that I'm talking about, right? Please do not do it. Yeah. Okay. Then if you're talking about OA shielding, right? Not many people are doing it. No comment has been made on this, but I think the IRAS might be concerned that you are doing tax avoidance lah, because technically you are a bit manipulating the tax. Okay, so you could potentially be charged in court. This is my opinion. Okay, this is not a fact. Okay, but so far no one has been charged yet, and this matter has been first shared in the year 2020, and then so far no one charged yet. So yeah, I mean technically the amount involved is very small. Maybe IRAS don't give a shit. Yeah. Okay, so summary, please consult a professional to help you do it, as you may not do it yourself correctly. Especially boomers. If you're reaching the retirement age, most likely you're a boomer, and then you might not be so tech savvy. Yeah, this is just a generalization, okay? So if you're super duper risk adverse, don't understand this entire thing that I'm talking about, please don't do it. Every good thing in this world comes with some form of risk, okay? Yeah, that's all for today. Yeah, so that's the end of today's video. I hope you learned something new today. So like I mentioned, this is not for the weak-hearted, and only people who are more technological savvy or financially savvy will know how to do it. So yeah. Okay, so thank you everyone for watching today's video. So please help to like and subscribe. Bye bye.